All right, everybody, welcome. Excited to be here today with you. Beautiful Friday. Happy Memorial Day weekend, right, everybody? So the new class, we have a new class coming up. We're going to kind of preview that. A new class starting, I believe it's a week from Tuesday. And it's going to be 3K, a conservative plan to make 3K monthly on 25K in 2021. The word conservative, I would throw that in there. I think conservative could be at times could be a misused word. How many people have heard the word conservative tied to covered rights? How many people have heard the word conservative to covered rights? All right, let me ask you a question. Is a covered right the same thing as a short put? Yes, back to conservative. Selling puts isn't conservative. Well, again, it's in the eye of the beholder. To me, when I'm saying a conservative plan to make 3K monthly on 25K, when it centers around risk management and what to do if you're wrong and having a plan, that's what makes these trades conservative to me. It's training people to understand risk management. I am not an options trader. You say, Dan, I thought you're an options guy. I'm a risk manager, right? Anybody can put a trade on, right? Most of you can go down to your Chipotle down the street. You can teach the cooks how to put an order in, how to put a calendar or butter flan in an hour. You can't teach them to manage the risk in an hour, right? So the key, anything in the world of options, if you're going to put conservative, risk, you can go in the direction of conservative if you are teaching a very solid risk management plan, right? 95% of newsletters out there that are showing strategies and stuff, where they fail is the risk management isn't that good, right? Anybody can throw a trade on. All right. So this new class, 3K monthly on 25K, I think a couple points on that, and then we'll move on to some strategies. How many people think you should have a plan when you're trading? Or should you just trade by the seat of your pants? How many people, yes or no, think you should have a plan? So let me ask a question. So you might say, Dan, did you use conservative numbers to come up with a plan to make 3K on 25K? Or is this a dream? And to me, I think these are conservative numbers. It's a plan. So how did I come up with that? Well, couple different ways. On the 25K, one of the key things I'm looking at is how many people have heard the expression inventory turnover, right? How many have ever heard that or know what that means? I don't think I've ever used that before, and I'm making it up as I go along. But inventory turnover. So what does that mean? If I have 25K, and let's say I'm basing it on one trade, one $25,000 trade a month. Wouldn't we think if we could put on a 25K trade every month, every week, next week another one, next week another? Well, now I just turned it over 4 times, right? And so the premise of this is we're going to tweak the durations, some short term, and we want to be careful on how short term we go, but what I'm looking at is picture in your mind during the class, what we're going to do is I'm going to show you, normally we do 3-week classes. The reason I'm doing this 4 weeks, who could guess why I'm doing this for 4 weeks? Who can guess why I'm doing this class for 4 weeks? Hint, the title, a plan to make 3K monthly and 25K in 2021. Let me give you that hint again. The title says a plan to make 3K monthly. I didn't put a plan to make 3K over 3 weeks. Do you get it? It's a monthly plan. So how do I illustrate a monthly plan? Going 3 weeks or 4 weeks? 4. This is going to be 4 weeks. But what we're doing is we're going to put a trade on. We're going to be teaching and putting a trade on every Tuesday and Thursday. I'm going to put 2 trades on. I'm going to put the trades on around $12,000 trades, but I'll have one contract so you can, for people starting out, I could illustrate it on the 25K, but it's going to be whether you do one contract, right? Still looking at the same yields. And the yields about, what did someone figure out? 12% a month, right? Is that correct? Somebody figured that out already? 12% a month is our target, right? So what I'm looking at is, if I can put 2 trades on, one on Tuesday, one on Thursday, and I make 3% weekly on those trades, right? 3% weekly. And again, this is on, so if I'm getting 3% weekly on the 25K, that's $750 a week, times 4 is $3,000. Another way to look at it, let's say I don't get that turnover and I just get 3 weeks of trades at 4% weekly. 4% on $25,000 would be 1,000. 1,000 times 3 weeks is $3K. So when you're doing, most of the trades will do. Yeah, Rudy says, do you have the same subject in your archive for a smaller account? So Rudy, is this for small accounts? Absolutely. But can it be for bigger? In other words, can a newer trader or a smaller trader do one contract to shoot for the 15% monthly? Yes or no? Yes, right? But can a bigger trader or more experienced, could he do the 25K right off the bat? Instead of doing one contract Tuesday and one Thursday, could he do 12 contracts and 12 Thursday? Do you guys get it? So is this for a smaller account? Yes. Is this for a beginner trader? Yes. Could this be for a veteran trader, very experienced? Yes. The yields, what we're looking at is we're putting on 2 trades, right? 2 trades. So we're going to practically show this during the week, right? The 4 weeks we do the class, every Tuesday we're going to put the trade on together, every Thursday. Now, you might say, Dan, I don't have that much experience. Should I be trading live? What do you think I would say? No. You don't know what you're doing? No. Paper trade. So the 3%, we're looking at 2 trades every week. We're going to do this whole thing together. If you want to do one contract, you do one. If you want to do 10 or 12, you could do it. I'll be doing one for the class. I'll also show 10 or 12, right? All right. Apart from account size, how does this course differ from the conservative portfolio 1? Strategies. We're going to show you how to be flexible with going on in terms of the different strategies. We're going to give you a blend. The conservative portfolio that I just taught, there were 2 strategies that benefited when the volatility goes up. So I'm basically giving you a kit that you can do in any volatility market. All right. So that's the plan, right? So our plan is going to be making 15% a month. That's it. Now let me ask you a question. Let's say we only make 10% a month. Do we get arrested? Do we get put in jail? Sheridan jail. Yeah. What's the point? A, you got to have a plan. B, if you don't hit your plan, that's okay. You learn from that. But I think you have a reasonable plan to follow. And again, the key is going to be during the class risk management. We're going to give you simple risk management, not a lot of adjustments, if any, just very easy. You put the trades on and learn it. The keys are going to be discipline and consistency, right? Let me ask you a question. When I say the 2 keys are discipline and consistency, does that have anything to do with your knowledge of the Greeks? When I say discipline and consistency, am I saying your option knowledge? Now, obviously you have to learn the options, but the 2 most important things don't have anything to do with it, with your options knowledge. Do you guys get that? Discipline and consistency. Bob says, no, your mental game, your emotional stability, but does most of the emotional instability with option traders come because they don't have a solid plan, a repeatable plan that they do over? Absolutely it is. Absolutely. It's an interesting article. Anybody read that in the Wall Street Journal in the last month? Like a psychologist came on to talk about traders, and he mentioned that what he found the problem was some people would make a different decision even when confronted with the same facts from week to week. Did anybody read that? And they're saying, and this big psychologist said what we all know is that you have a consistent plan. You shouldn't be swayed by or whatever. Yeah, when and a good point, when the trade becomes boring, I started to make money. So anyways, this is going to be a great practical class. I think it'll be our most popular class of the year. It's an opportunity, whatever level you're at, we'll do this together. We'll work on this together. Now, again, this is a 1 month snapshot, right? So we hope to make money on it, but would it be possible to break even or not make money 1 month over a 12-month? Yes, right? Doesn't happen much, but I mean, those things are possible. The key is consistency. Any other questions on that? And we'll just show you, again, we'll make it try to keep it as simple as possible, but the risk management is the key. Any questions on that before we look at the market, look at a few strategies, and give you a little more of a glimpse into the class? Any questions on that? Oh, early bird pricing will be, John, remind me, we're going to run a Memorial Day special for 4-week classes. That's just $397. Our early bird special, if you sign up by Monday evening at the latest, the $397 will be $349. After that, it'll go back up to $397. So if you sign up this weekend, it'll be $349, and that includes the 4 weeks, all the trades, the slides, the PowerPoints. After the class is over, you can continue access to the slides in the videos. And what's unique about us is always that you get a class page. You can click on there, ask Dan a question. So if you watch it recorded, even if you can't make some of the classes live or any of them, you can watch it recorded. You can click the button to ask Dan. Rudy says, sounds like you're bringing some of your learning as a market maker. Well, yeah, I mean, that's a big part of my life, 23 years in there. So yeah, that's a big part of it, especially with the risk management. Will Jay Bailey be involved? I'm sure he'll be involved for a class. Mark will be teaching it with me. Mainly Mark and I, but we'll get Jay in there for at least a class, probably. All right. I think that should be questions. A couple trades, as we look at the market, and another thing we're going to do is, we'll talk about when we would trade, when we would not trade. All right. Can you clarify the percent profit based on the account value or the trade cost? I'm looking at the account. So we're looking for 15% a month. That's the plan. And I just broke it down for you at the beginning a little bit, that we're looking for some turnover of inventory. So we're looking at, and this would be a typical trade, and we'll show you when to do what trades. And the goal is that we give you a plan that after a month, right, if you've stayed with it, just do it. Paper, one contract, whatever. One contract live if you're experienced, but do paper would be fine, and we'll do it together. So when you're looking, I like Friday expirations. It doesn't always have to be a Friday expiration, but a Friday expiration, if we just look at this here for a second, we'll just look at a couple things. I don't normally put trades on Friday to take the weekend risk. We would be looking at like June 11th or June 18th. So here would be 14 days out. As we look at the market real quick, let's just take a quick look at the market. When you look up here, let me ask you guys a question. Are we range bound? What do you think? Over the last couple months or so, would you say we're range bound? What do you think? Are we range bound? Yeah. Over a couple months. So the answer is yes. Over the last maybe a month or two, we've been in this range. We bounced off the 50-day moving average a bit. So we're range bound. VIX is finally is the VIX over the last 3 months has been roughly around 16 to 28. We're kind of within that range. We're range bound in the SPX. ATR is trending down, which that just means that ATR measures the high and the low differential in the SPX every day. So as range bound traders, you don't want big ranges. Anything significant about VIX right now at 1597, let me just say this. Who would agree this is the first time we've hit 15s in almost a year and a half? This is the first time in 16 months that the VIX has made a public appearance in the 15s. All right, so this is in the low end of the range right now. And so a calendar trade would be something that would benefit if the volatility would go up. We're always looking reversion to the mean. Mr. Me is being technical on me. He says, Dan, April 13th was 1538. Mr. Me, I have a question for you. I'll bet you 2 Italian beef sandwiches with hot and sweet peppers that we didn't close at 1538 on April 13th. Do you want to bet? 2 Italian beef sandwiches with sweet and hot peppers from Portillo's in Chicago, April 13th, we did not close at 1538. What did we close in the VIX on April 13th? Who can look and see where did we close? Where did we close April 13th in VIX? So we're looking at the VIX to go higher, but I'm just going to give you an example just so we can talk trades today. And again, with the 3-day weekend coming up, they're tweaking the market makers are, the volatilities are very low, especially in the near-term options. So let's just look at a calendar trade for today. So I'm going to look at one second here. By calendar. So this should be an example of a calendar. This should be a type of a trade that we would be talking about as 14 days to expiration. So generally, we're going to be in trades about 30% of the duration. So if we're going to be in a 14-day trade for 30% of the duration, how many would you agree that we could be out of, see where the inventory turnover is developing? This is a trade that expires in 14 days, and we're only going to be in at 30% of the duration. 30% of 14 days would be about 5 days. So the next week, we'd be in a new trade with the same inventory. All right. So here would be an example of a trade that I would do if it were a Monday or a Tuesday. I'd sell the June 11, 14 days out, and I would buy the June 18, 7 days between the long and the short. And you could do calls or puts. It doesn't matter with calendars. If you're more neutral on a calendar, you would do it at the money, right? So if we go to 42, we're around 42.10. So that's what it would look like. When the VIX is lower, so this is a think or swim graph. For those of you who maybe aren't familiar with, on this graph, the purple line is a picture of your graph today. The blue line, which looks like a shark coming out of the water, is your expiration graph in 14 days. Over time, if I go a week into the future, you could see how that purple line goes up. And eventually it morphs into the blue line. But what you notice when the VIX is low, again, we're the lowest. This is the first time in 16 months the VIX hits under 16. It makes this shark coming out of the water, the mouth is much narrower, right? As the volatility gets higher and higher, these expiration break-evens where the blue line crosses zero at expiration, they'd be a lot wider if the VIX were higher, right? You have 2 risks for every option trade: price risk for the types of trades we do, positive theta trades, price risk and volatility risk. And but we like to trade with the calendar because the volatilities are low. So a calendar is simply You're buying a farther out expiration, June 18th, selling a closer in operation expiration, June 11th. The one you're buying is farther than the one you're selling, and you're doing it the same strike if you're neutral, or it'd be probably 42.15 here. If I was bullish, I'd put the strike 20, 30 points above the current price. If I was bearish, I'd put the price 30, 40 points below. Do I need the left side of the chart open? Just a little bit, but not much, Rudy. I can do that. Is that a little better? So that's a calendar trade, and you can see it's a neutral volatility or neutral delta trade, and you make your money because the June 18s. I'll give you an idea how they make money. Well, I don't have my annotation device, but they make money because the June 11th has 14 days to go. The June 18th has 21 days to go. So as we stay near at the money at expiration, your June 11s, which are shorter, is going to decay a lot more than your June 18s, which are long, even though they cost more. So this would be one of the trades we would trade that we could take advantage of. Another trade could be we trade some butterflies. Here would be an example of a butterfly. And again, all the trades we do, we're bringing in positive time decay, like an insurance company. And then the key to all of this, what do you think the key to this is? The key volatility is the key, the right direction of the market is the key this, is the key that. Now the key is getting positive theta, like an insurance company, but having good risk management, right? Good risk management. How do insurance companies employ good risk management? How do they employ good risk management? Because they have their model is they collect premiums. That's what we're looking to do, collect positive theta, right? And our risk management is when it goes against us, right? Our two most important things are be consistent, but the other thing is keep our losers not far from our winners. Pretty simple game plan. It's really a disciplined thing. Insurance companies, how do they handle their risk management? Well, they hedge, right? Are they picky about what they do? If Skizzy comes into them and says, you know what? I've got cancer, my toes are falling off, my nose is falling off, I've had 3 heart attacks and I've had this, are they going to say, come on in? Other trades will employ, how many do put credit spreads or credit spreads? Again, most of the stuff we're going to employ is going to be deltas that are going to be near zero, more delta neutral. We're not betting so much on the market, but we use this, a put credit spread. And, I might put credit spreads, it might go a little bit further out. We're going to diversify our duration. We don't want to go too close to expiration. Those trades have too much price risk, too far away. You don't get enough theta to turn over your inventory. We do a mix, and that's, we're going to show you a simple mix. But here would be just, I'll show you a credit spread. Now, would I put a put credit spread on today where we're near the all-time highs and VIX is low? Not today, but this is definitely another type of trade that we'll be using in the class, and we'll let you know when we would use it. Again, our goal over the 4 weeks is to give you an actionable plan that you can do, right? I'm not a Rhodes Scholar. We have no Rhodes Scholars in the class, so this is for your normal people, your normal folk. So here'd be an example of a put credit spread we do. Again, I would not do it today because the VIX volatility is too low, but I would do it more on a down day. I need a little bit of pump and volatility, but we'll show you when we would use that. But this would be the type of put credit spread that we would do, and we're looking about 21 days out. And generally, I'm looking maybe a 20 delta on the puts, which would take us to 48, which would take us to 40.80. on the put side. And then 40, again, you can do, depending on your account size, you can do 5 wide, 10 wide, or 20 wide. We do a lot of 20 wide. It's a little more expensive. Here'd be an example of a 10 wide put credit spread. And if you look at it today, I'll give you a little bit of information on this. This put spread, if this is the underline, we're at 42.13 or so, right around here in the SPX. If you go 3 weeks out on the short put, we're selling a 40.80. Where you want it, you get about 130 points. Just to give you an idea, if VIX would have been 18, we might get 225 points further out of the money. So the higher the VIX, the more room you'll get. But we're not moving as much right now. But with the VIX, the credit is $1. Now, will you get a little bit higher credit if the VIX were higher? Yeah, but the main thing you get when the VIX is higher is more room on your short put. Again, we'll teach you for something like this. If I do a put credit spread for $1, 10 wide, what's my risk? If I do a put credit spread for $1, 10 wide, $1,000 of risk, what's my margin at my brokerage firm? It'd be $900, right? So if I'm looking to make, so what type of yield potential is that? If the most I can make is $1 on 900, what's the yield potential? If I can potentially make 10% max, so you don't get that much. If the VIX were higher, you'd have a much higher. You'd have definitely a higher potential yield. But this is 10%. 100 divided by 900, and so that's the most you can make. And so we'll talk about in the class. Well, do we go for the whole Chihuahua? Or do we, what percent of that will we go for? Because again, to go for the whole thing, you got to be in the trade the whole time. I don't like to be in a trade 100% of the duration, normally about 30%. This would be another type of trade. We'll probably have a universe of 3-4 trades we'll look at during the class. So anyways, we look forward to working with you. It'll be a week from this Tuesday. If you have any other questions, email me, dan@sheridanmentoring.com. Again, the early bird special is just this weekend. You can get in for $349. Any other questions? If not, we will see you a week from Tuesday. You will be able to sign up on Sheridan Mentoring. And Johnny put a link in there. But very, very low VIX today. Have a great weekend, everybody. Appreciate you coming. Yeah, this will be recorded. All the classes in the 4-week online class that we're going to do are recorded, and they'll be available maybe a half hour after class. So on June 18th, we also have monthly expiration. The class will be starting June 8th. On a Tuesday, the classes will go Tuesday, Thursday, because these are typically the days I would put these trades on. So we're going to do this exactly as we do this normally, this type of plan. So you'll have a good practical, and then the goal is, here's the goal. It's like, what's that saying? Teach someone to fish, or you can fish for someone or teach them to fish. So the goal is after a month, you get the hang of it, and then you're going to go try it now for a month or two. Or, are you going to be a great trader in a month? Of course not, but you can get the discipline down of being disciplined trader. So thanks, everybody, and we will see you at the class, and we'll have a good time. Thank you. And we'll discuss all risk management during the class, when we take something off, when we put it on, which strike, etc. Thanks.